What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to take a macro level view of the stock market and we'll be looking at weekly charts of the SPX, the NDX, the Dow Jones, the Russell 2000, the VIX, and Bitcoin. Also, I have a big announcement that I'm super excited to share with all of you. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so the big announcement is that I'm launching my brand new business, which is called Bank Trade Alerts. I'll be linking you to a video above so you can find out all about Bank Trade Alerts, but essentially what it is an algorithm-driven back-tested system that only trades TQQQs. So exactly how it works and the performance of this algorithm-driven trade alert service is completely laid out on the website banktradealerts.com and also in the YouTube video that I published earlier this morning. I'll have all the descriptions in the link below. So if you've been looking for a buy and sell trade alert service that does very well in all markets, including bear, bull, and sideways markets, check out this trade service because it's absolutely amazing and I've been using it myself since 2017. My business partner invented the system 20 years ago and this system is absolutely amazing, so check it out. Also note, the Stocks Channel Discord is not going anywhere and these businesses will operate separately. So if you're joining Bank Trade Alerts and you're currently a member of the Stocks Channel Discord, please do not confuse them and do not share the alerts with members that are not part of the Bank Trade Alerts Discord server. Also, I'm running a 50% off for your first month if you're one of the first 500 members. All of the information for the promo will be in the description below. Alright, so jumping over to the S&P 500 SPX index, we are looking at a weekly chart, so do remember that every candlestick does represent one entire week's worth of price action. So we can see here we're finally seeing selling in the SPX and the week did close below the 5 EMA. You can see the bull trend is still intact with all the moving averages still stacked to the bull side, but this is definitely a bearish looking candle. The price action completely engulfs the previous week and we're getting very close to that support level right around 4150. Now keep in mind that gaps typically get filled and we still do have a gap on SPX on a weekly chart going all the way back down to about 4019. Now don't forget, we don't know exactly when gaps will get filled, but it's not a matter of if, it's just a matter of when. So this gap is very likely going to get filled and we will know it's going to get filled if we do start to break down further. So below levels on SPX of about 4150, we will be looking for SPX to retest the 20 simple moving average on the weekly chart, which is down here around 4060. Below 4060, it's very likely we're going down to fill that gap. So watching the price action this week is going to be very critical. Remember, this is macro level analysis, so we're only looking at weekly and monthly charts, but we're definitely starting to see some critical support levels breaking down in SPY. But overall, on a macro level view, don't forget our price target is still up here at 4306 and we have not yet hit that target. Are we going to hit that price target and then close the gap down here at 4,000? Or are we going to close the gap at 4,000 and possibly make another run up in the middle of the year to finish out this price target and then see a deeper correction? Only time will tell, but right now, do note that it is likely the stock market can still continue to go higher. There's going to be a lot of the stock market is crashing noise out there, but do remember we're staying objective and we're following the price action and the trend very closely. We still see the SPX holding above critical support levels and we still see a bull trend. And right now, we do have to remember that we're coming out of all-time highs. So anytime we hit one of those all-time high price targets that I give in my daily analysis, it is possible it could trigger a stock market correction. So right now, we're in that territory of, is this just a pullback or is this going to turn into something much bigger and end up being a larger correction? So right now, from the all-time high to last week's close, we're down about 2%. So we're in that pullback territory of a 1.5 to a 3.5% pullback, but it could spiral out of control and it could turn into a 10 to 15% correction. So stay focused on the price action day to day and watch those critical support levels. Jumping over to a monthly chart, we can still see that we're very far extended and we're well above the 5 EMA and we still have a very strong bull trend. From last week's close on the monthly chart down to the 20 simple moving average, we can see we do have about a 17% drop. So we always need to be aware when the market could be possibly rolling over, what our potential downside risk is. We have our trend lines as well, so from last week's close down to our trend line is about a 10 to 13% drop. So it doesn't mean we have to go down and test those levels, but that's definitely where you want to set your risk. That could bring us all the way back down to SPX levels of 3750 down to about 3640. So do know it is possible we do go back down to those levels eventually and do test those breakouts as support. Remember that these trend lines go all the way back to 2009, and typically when you get a breakout of resistance, you do backtest that level as support. So do understand your downside risk, and remember, we still have a bull trend and we still see the price action holding up over critical support. So if we see critical support breaking down, we will start looking at these lower support levels as a possible buying opportunity and as our risk levels if we do start declining. On the bear bull survey, we can see we still have 41.1% bulls with 32.7% of the people still neutral. We are seeing a slight increase in the bears going up to 26%. So overall, there's nothing completely abnormal about the survey, but we definitely see more bulls and more neutral people than we do bears. Typically, when you see a lot of greed, you're going to see a lot of bulls and not a lot of bears, and that's exactly what we had with last week's update. We had over 40% bulls and only 20.7% bears, and we're starting to see some selling. So overall, there's nothing abnormal about the survey this week, but do know there's still plenty of cash on the sidelines with over 32% of the people neutral and 26% bears. So if we do hit a critical support and we do start to find buyers at that level, we will see plenty of cash on the sidelines that can still be deployed. But watch those critical supports because if they break down, we could be going much lower. Jumping over to the NDX weekly chart, we can see our price target up here at 14,488, and from last week's close up to that level, we still have about 3% upside. Remember, there's no guarantee we have to hit these price targets, but it is very likely we will hit these targets before we see a major correction. On the NDX, we can see that we did close at a new all-time high, and we did form a doji candle on the weekly chart. The trend is still full bull with all the moving averages positive sloping and still stacked to the bull side. The price action still closing over the 5 EMA, and we still see the NDX holding up very strong. From last week's close down to the 20 simple moving average on the weekly chart is about a 3.7% drop. So that's a good place to set your risk right now if we do start breaking down through critical support. Remember, the critical support levels I'm talking about are on my day-to-day analysis, and I've outlined those levels very closely because if we see price action closing below those levels on a daily chart, it could lead to a macro level breakdown as well. So the daily analysis will be our early warning sign that things are starting to break down, but overall on the macro level analysis, we still don't see any major breakdown. Switching over to a monthly chart on the NDX, we can see that we are still up here at all-time highs and we're still trading above a positive sloping 5 EMA with all of the moving averages still stacked to the bull side. So overall on the NDX, things are still looking bullish and we don't see any major breakdowns on a macro level scale. On the Dow Jones, we see a very different picture on the weekly chart, and we can see a monster bearish candle fully engulfing the previous months of data. We see the Dow Jones getting all the way back down to the 20 simple moving average on the weekly chart, and we are still maintaining the bullish trend. So when we get to the 20 simple moving average, which is a critical support level in all bull markets, and we still have a bullish trend, we have to give the bulls the benefit of the doubt, and we have to assume that buyers are going to try to step in from this level. So remember, typically speaking, unless the stock market is going to crash, bull markets do not die easily. So the Dow Jones is definitely rolling over and trying to die, but until it starts getting below the 20 simple moving average on this weekly chart, there's no guarantee that we won't see a lot of buyers of the dip at these levels because prices are starting to look more attractive the lower the prices go. Remember that risk increases the higher we go and risk decreases the lower we go, and right now the Dow Jones is getting to attractive buying prices. That doesn't guarantee buyers have to step in. So watch that level very closely around 33,250. The 50 EMA is all the way down here at 31,000, and if we do start breaking down and getting back down to that level, that would be an additional 6.7% drop in the Dow Jones. So this will be a very important week, especially looking at the Dow Jones chart to see if this critical support level is going to hold up and to see if we get a bounce. If we do start to bounce off this support level, we'll be looking to see if we get a lower high or a higher high in the weekly chart. If we get to a lower high and start declining yet again, that could mean that we did see the top in the Dow Jones and we're going much lower. So do expect to see a bounce off this critical support, even though it may be short-lived and the decline could continue afterward. It still does look like the Dow Jones is getting ready to bounce here. Jumping over to the monthly chart, we can see the Dow Jones getting very close to the 5 EMA, which is right around 33,000. So we could still go down and test that level as support before we see buyers stepping in a major way. But do remember on the weekly chart, we're basically already at that critical support. We still see the Dow Jones in a full bull trend with the price action still above the 5 EMA. On the Russell 2000, we also see a very bearish weekly candle fully engulfing the last couple of weeks of data, and we do see the price action closing below the 20 simple moving average and the 13 EMA on the weekly chart. Remember though, the Russell 2000 never had that full bull trend over the past few weeks, and during that consolidation, it did lose a lot of the bullish momentum. So will we see the Russell 2000 breaking out to new all-time highs is to be determined, but we definitely see a lot more weakness in the Russell 2000. The critical support failed to hold up, which does mean we could be coming back down to the 50 EMA, which is down here around another 10% drop. There's also a support trend line, which is right around a 6.4% drop, and the Russell 2000 could also find support there. So on the Russell 2000, we can definitely see plenty of weakness going into this week's candle, and that does mean we could be seeing the market breaking down, and it does mean the Russell 2000 could be going much lower. So watch those critical support levels very closely because as you can tell from the weekly chart, it does look like the Russell 2000 is trying to break down. On the monthly chart, you can still see why the Russell 2000 has been consolidating for so long is because it's still relatively overextended. It got way too far on the monthly chart and way outside the upper Bollinger Band, and now it's correcting and consolidating, trying to cool off before it can make another run higher. We still have the bull trend on the monthly chart, and we still have the price action above the 5 EMA. So it's very likely we could come back down and retest the support trend line right around 2100 before we see major buyers of the dip coming back into the Russell 2000. So as you can tell from this weekly chart, be cautious on the Russell 2000, and you can also see those Bollinger Bands are squeezing, so a big move is coming in the next couple of months. Jumping over to the VIX weekly chart is we could definitely see a spike in volatility. The VIX was up over 20.7 on the close on Friday, and we can see a very bullish candle on the VIX encompassing the last 3 weeks of data. So remember that the VIX spikes when fear spikes, and when fear spikes, we could be increasing the chances of a stock market correction. So right now, watch the VIX closely, and if you're a bull, you really want to see the VIX getting back down below 19 and 18.2. Right now, that sweet spot on the VIX above 20 is going to be more volatile and more likely we see massive panic and more selling, which could lead to a deeper stock market correction. So watch the VIX closely and specifically pay attention to whether it's above 20 or below 20. On Bitcoin, we're currently trading around 35,000, and we do see Bitcoin is finding support at the 50 EMA on the weekly chart. That strong support level is building up around 33,000, and we see Bitcoin has not closed below that level for a weekly candle. Overall, this still looks like a relatively bearish flag, and we do see a monster drop followed by a consolidation, which does mean we could still have one leg lower. So if we do start breaking down below that critical support around 33,000, look for critical support at 30,000 and 27,000. Below 27,000, we could be coming back down to about 23,000 or 20,000. So Bitcoin is not out of the water yet, and it's still in a bear market, and you can see that it has no bullish trending on the weekly chart. The critical resistance is still 39,000, and we really need to see the Bitcoin bulls getting back above 43,000 to start thinking that Bitcoin can go back into a bull market. On a monthly chart, you can still see Bitcoin had that blow off top look where it went up with a parabolic move and it came down with a parabolic move. Eventually, it should find support and we would see a renewed bull rally, but don't try to catch a falling knife because it's still possible Bitcoin comes down much lower. So watch those critical support and critical resistance levels very closely, and don't try to jump the gun on Bitcoin because it still could go much lower. Wait for a confirmation of a bull rally before you try to jump in and ride it to new all-time highs. So jumping back over to the SPX, you can definitely see there is a lot of weakness in the stock market, especially with the Dow Jones and the Russell 2000. Bitcoin is also looking very weak, which could be showing that we're in a risk-off environment and there's not a lot of investors looking to take on a lot of risk right now. That could lead to a weak spot in the market, but don't forget the SPX and the NDX still have a bullish trend and we still haven't hit our upside price targets. So always stay objective and always remember there's a chance that the bull rally continues on before it rolls over and dies. Bull markets are very strong and they last a long time, and it's not like you can just short the market and ride it much lower while we're still in a bull market. So looking at the trends and the price action, we're definitely still in a bull market, but we are starting to weaken and we are starting to see weak spots in the market getting exposed. So pay close attention to the price action going into next week and watch those critical support levels very closely. Remember, we need to break through critical support to validate that we are going to see more weakness. So happy Father's Day, everybody. Shout out to all you dads out there. I'm really looking forward to the future ahead with the bank trade alert system. I think you're all going to love this trade service, so please check it out and let me know if you have any questions. And as always, I will see you in the next episode.